Despite the recent collapse of African Bank and the struggle by global banks to meet Basel III requirements of holding enough cash, the South African Reserve Bank says investors need not worry about the local banking system.
Our banks remain well capitalized. The capital adequacy levels is about 14.6% compared to the statutory minimum capital levels of 10%. And by any stretch of the imagination, they remain well capitalized. And one of the conclusions of this report, obviously we look at a number of risk factors, is that the financial system in South Africa remains sound.
But there are some issues keeping the bank of last resort on its toes. It's concerned about the effects of the increase in the cost of living on the stability of consumer spending. While a wider current account deficit and high unemployment are likely to fuel more labor unrest in the economy. Despite the weak local economic growth and African Bank's curatorship, the South African Reserve Bank maintains that South Africa's banking sector remains strong and capable of dealing with any disruptions. But the potential rise in interest rates in the United States has brought about the potential of diminished investments hitting our shores in the near future.
Obviously, what one needs to consider is obviously there's a correlation between US interest rates and global interest rates, right? But I think one of the issues that we have emphasized in previous statements is that it is one of the input factors that we have to consider, but we also have to look at domestic conditions and we have to look at the inflation path.
Meanwhile, unsecured lending has risen to 490 billion rand in the first half of the year, although the growth remains lower when compared to previous terms. The bank's confidence in the country's financial system is stronger than ever, but it warns that global and local uncertainties need to be monitored closely.